You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is financial consultant and wealth manager Richard Knowles of Knowles & Associates in Vancouver. Welcome to the show, Richard.
Thank you very much, Jim. Pleasure to be here.
The Prime Minister said just a little while ago that he's going to go through with all the promised tax cuts, that there won't be a deficit this year, that he will have a surplus as promised. Yet the Toronto Dominion Bank and other financial institutions say, whoa, hold on a second here. With the drop in oil revenue, we're looking at a $2.3 billion deficit this year and a $600 million deficit next year. There are fears the government will raid the $3 billion contingency fund so that they can bribe you with your own money for the election this year.
That's true. Whenever I hear these things around election time, I'm not going to pick on the current government here. I'm just going to pick on everybody in government. I'm sorry, guys. If you're listening and you're an MP or anything, please close your ears. It's nothing personal, but I've never known a politician not to lie. And I don't think that, it's nothing personal again, but the reality is that fudging the truth or being disinformed or misinformed is very common for politicians. Remember, these guys are regular Joes. They're no smarter than most people that are out there. And in fact, arguably, to be honest, there's far smarter people that are not in politics. So it's not about intelligence. It's about the abilities of individuals to be popular and to be good, sometimes good leaders. However, in reality, it's not about how intelligent and how smart they are per se on a particular topic. So therefore, they're caught lying or misinforming is the real word. They believe, understandably, many things that are said by politicians are culpably deniable. They really didn't know the right answer, and they just kind of make it up. Famous truisms, we call them the Bushisms of the George W. Bush years, were the most some of the most hilarious and certainly politically some of the saddest moments in political history. However, the reality is at the end of the day, these people are not put there because many of them are not professionals or knowledgeable about the topics, but they're required to speak about them. And this is a lot of pressure. It's terrible. They have to trust people to give them certain facts, and they're mouthpieces for these administrative people that are giving them facts, and they believe them, and they have to trust them. And then they're found out later to be untrue or incorrect or certainly misleading. And then, of course, the individual political leader has to take it on the chin. However, that is a statement about the political party. And if you have poor administrative backbenchers that are giving you poor information, misleading the public, not getting their facts straight, then unfortunately the government should likely be changed because it's a package deal. So, you have to take everything that seems to be promoted by most governments, especially in election years, in my opinion, to be always taken with a grain of salt and a tongue in your cheek.
And when you say politicians like to be positive during election years, Alberta's new Premier Jim Prentice says, oh no, we're not in recession. And yet, of course, Alberta will be the province hit hardest by lower oil prices. And how long will these low prices last? Well, remember 1986? Oil prices stayed low until 1990. And they said the markets are set up about the same way they were back then. Would it be realistic to expect these low prices to last 5 or 6 years?
Yeah, I absolutely have no reason to disbelieve the fact that oil could stay low for many years, when we listened to the Saudi prince the other day, he stated that seeing oil at $100 a barrel again, forget it. It's never going to happen in his life. Certainly not in his lifetime, and perhaps not even in the Saudi sheikh's lifetime again. So this is not in the foreseeable future, certainly not by the biggest oil producers on the planet, and unless they change their mind. So at this point, I think the heyday of oil has slipped by. We are now in the new reality of the new pricing structure for some time, maybe even for the rest of our lives. Who knows? The truth of the matter is that we are weaning the world off of oil. It's not a pretty sight, It's like taking people off heroin, I suppose. I keep using that example when we talk about oil, heroin addiction. But it's like trying to take anyone off of anything that is an addiction. And consequently, at first, it seems painful, But indeed, the transition period is painful, but the new era that we begin in is extremely positive. If you look at the other side of the fence, once you climb over it, you're seeing a far more affordable economy. Inflation is far better under control. They don't have to lie about inflation rates to exclude oil and housing prices anymore. They could bring that back in, if you like, which they have eradicated simply because it didn't play into their favor for inflation. That is the truth. We've talked about that in other shows. There is the issues surrounding just everything we make. There's so much we make out of plastics and transportation costs of goods. Everything will drop and therefore make it more affordable and therefore having more money in the pocket of every single consumer virtually on the planet. Now, who's going to be crying? The people crying over their spilled milk are the oil companies and maybe the share owners of investors that are heavily vested in only in the small oil plays, oil companies that are perhaps going to go out of business. The very small ones may not be able to sustain themselves. There is still oil being pumped. It's just not as much profit. So consequently, if you own shares of those companies, the share dilution based on how many shares are out there, there'll be less profit per share. The prices will come down. And that speaks to having a diversified portfolio. I think if you had exposure to oil as an investor, you have to be extremely cautious to any segment of the investment and climate. And I feel for anyone that's overweighted in any particular area. This is like the technology boom that went bust. If everybody had all their money in high-tech Nortels and other things that went bust in the year of 2000, you know exactly what I'm talking about. It was too much in one type of asset type, and you can be caught at any time. And so to think that oil was going to go unfettered into the universe, into the stratosphere of prices forever, is just a really one of ignorance and one of lack of foresight and knowledge and getting good advice. So I think I feel for those people. However, we're the harbinger of our own fates. We make the beds we sleep in. And so consequently, we do have to do something to get out of this. And as a world, we are certainly facing a much better world. Certainly, I think if things are more affordable, if you've lost money in your stocks, you've just made money every time you go out and pump your gas. Now, if you've got an electric car, you're already been ahead of the game anyway. The alternative is that, of course, the price for things are going to be lower, so you're saving money there. And what you may have lost in one place, you've gained in another. And
Richard, I was going to ask, though, about the future of electric cars. If the price of gasoline is low, what's the incentive to buy a very expensive electric car?
Yeah, that's been forecasted to come back. The gas car will come back. It's certainly, I think people do it for different reasons. I think a lot of people buy electric cars for the environment because it still is better for the environment overall, for our environment on this planet, and for the long-term longevity of our environment on this planet, to get it into alternate fuels. However, that seems to be a scientific fact, and as a scientist originally myself, I can support that. So, whether you do it for that reason, if it's affordability, I think what will likely happen is that there will be a natural rebalance. So electric cars were very expensive initially because what they did was they priced in the savings from the gas that you're going to make in the first few years. You overpay for it, but you start to save over gas over 5 years. And so you get your money back for the extra price you pay for an electric car. However, now that gas is lower, that will mean that electric cars, to be saleable and to be more competitive, the prices will drop, which is great from a consumer standpoint. It's a win-win at every turn I look at. As an economist and as an advisor, I look at all avenues of profit and losses, advantages and disadvantages. I look at the whole spectrum. And I'm not just looking at it as an oil guy. I'm not just looking at it as an electric environmentalist. I'm saying, what's the overall advantage to any economy, global or Canadian or what have you, with this transition? And it means at every turn that I look at, apart from the short-term pain, it's a long-term gain. We still will be making oil. We still are one of the biggest oil producers on the planet. It costs us to get it out, yes. It can only go so far before it becomes not as profitable. But with technology, typically, we find more profitable ways to do it if we're forced to do it. We're currently, I believe, the cost for us to get out of oil sands, I was heard quoted at $35 US a barrel. Well, if it became $35 US a barrel for oil today, that would make oil sands not profitable, and they would literally shut down. I don't envision that happening. What will likely happen is you will see the companies that are in there become more profitable by cutting waste. They will look more carefully at how the cost of bringing it out. When it's at a very high cost, they were allowing rampant costs and infrastructure costs to go a little bit wilder. But now when they're forced to look at it, they could probably bring the cost down closer to Saudi. Who knows? Saudi, it's only $6 a barrel. So why is there such a massive difference in the procedures? Well, I think we all know the answers. Different type of oil, different type of labor. They've been doing it longer, so they're all established. Everything seems smoothed out. Well, we're in a learning curve, and Canada has known this for a long time. It's a new thing for us. So in this learning curve, we're going to become more efficient, more productive, and if we were growing at a slower pace, we probably would have developed technology at a lower cost instead of pumping a lot of money into the initial phases to get this new technology going. So I suspect that that's what's going to happen in Canada if it hits 35 a barrel on the global market. Canadians who need to bring it down will find ways to do so. And certainly laying people off, unfortunately, is one avenue of that. Many companies have already laid off some numbers. I heard Suncor, I believe it was 1,000 people have been laid off in the tar sands area.
That's exactly right.
Yeah. So we have a number of different things going on.
We'll have more with Richard Knowles right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Richard Knowles of Knowles & Associates. Richard, you'll remember just a few months ago, the Bank of Canada was strongly hinting that we would see higher interest rates this spring. Will that happen now that oil prices have plunged?
Well, no, I don't think it was going. Yeah, I have actually already mentioned that earlier. I did not believe that they would be increasing interest rates. They were talking about it, and that's because periodically when they meet, every few months, they really only look at the last quarter, and consequently, if the quarter has been very robust, they will unfortunately report that they will likely be addressing that. And we've had a very robust year this last year, so their presumption is that this will continue, whereas I myself and many other people that I speak to did not seem to feel that that was a warranted assumption. So I myself have been on this show and other places stating that I did not believe that interest rates will increase this year. And I believe that if they were to increase, it would be very marginal, and it would be at the very least, towards the end of the year. And while I didn't know about oil prices, tumbling until the fall, I did say that before the fall, but certainly within the fall, this last few months, when we saw oil prices drop, I forecasted no interest rate increases. So I'm not surprised at all to hear this. And I believe that what they're doing, and typical to the Bank of Canada, all respect there, they are really looking at the last few quarters. And if the last quarter is being forecasted to go long term, then they of course would not be thinking of increasing interest rates. And indeed are starting to talk. My understanding is to talk about decreasing them.
What about people who expect to see some money in their savings account and see it grow from interest rates? No hope there?
Savings accounts? No. I think savings accounts and term deposits have been a non-issue for a long time, and I wouldn't be planning for that. Income right now is really based on good income investments, everything from REITs to good income funds which hold REITs or bonds, good corporate bonds, higher yielding corporate bonds, also dividends from established dividend corporations.
Will there be any new trend that you can see this year when it comes to investing? New
trends? No, I expect that they'll most likely continue on with the same trends we've had for the last few years, which is to remain defensive, to look for income-generating established companies. But with this most recent sell-off, we're going to see a lot of money that's been sitting on the sidelines, by the way, waiting to come in, to start to position in. There's a bottom to this market. It's not a free fall, but there's going to be a bottom. There's so many good deals that are starting to come up, and certainly have been coming up overall, that that there's a lot of cash willing to come in now that was just basically out of the markets. Remember, we were at all-time highs for the U.S. markets. You look at S&P, Dow Jones, while Canada was still struggling with getting back to their highs of 15,000 on the Toronto Stock Exchange from many years ago. We haven't even gone back to the 2008 numbers we achieved back in 2008. I don't know if your listeners are aware of this. Toronto Stock Exchange hit over 15,000 in July and August of 2008, prior to the big tumble and the big crash. We've never really achieved that. We just touched it a couple of years ago, but then we've dipped back below that, consistently below that, for the last many years, so since 2008. So consequently, we really are not like the U.S. markets, who have not only surpassed their 2008 highs, but have been hitting new highs right up until the big fall in oil. And so people have been very reticent to jump in at these high levels. So there's a lot of cash sitting on the sidelines waiting to come in. And that cash has been waiting for a correction. Some of the biggest pundits in the markets have been calling for a correction right in the new year, right now. And so we're seeing it, and they were correct, and I certainly am in that ballpark. And I've been telling my clients to hold his cash until we get this thing out of the way.
Richard, thanks a lot for chatting with us.
You're very welcome. Thank you for the time.
My guest has been financial consultant and wealth manager Richard Knowles of Knowles & Associates in Vancouver. If you have any questions for Richard, you can send them to Richard K, the letter K, at customplanfinancial.com. You're listening to HoweStreet.com radio. You can find us on Twitter at Talk Digital Net. We're also available on YouTube channel Talk Digital Network. Comments about the show can be sent to info@HoweStreet.com. I'm Jim Goddard.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.